G'day guys, it's Jake here. Nothing in this video is financial advice. Please do your own research when it comes to investing. Please be sure to check out my links below, including exchanges I use and social media content that I post. All right, let's go. So the topic for this video, we'll be going over CPI numbers that come out in the US. We're also discussing some breaking news in the stock market in regards to Nvidia, the Subway, Home Depot, and Warren Buffett. So first up, start with inflation numbers. What we have, core inflation first up, month over month. The consensus was 0.2%, and he came in exactly as consensus was predicting. And previously we had 0.1%. This is for the month of July. So we lagged by a month. And then core inflation rate year over year came in at 3.2%, which was in line with expectations of 3.2%, and previously was 3.3%. So we did see a decline in the year over year numbers for core, but we did see an uptick in month over month. And then we have just inflation rate. So core is inflation minus food and energy, so which make up a big component. And inflation includes all categories, okay? And 2/3 of that is made up of housing. So that is the main factor there, 2/3, which is gone up. So that's that. And we had month over month, 0.2 for inflation rate, and consensus was 0.2, so it came in exactly a consensus. And previously we saw it minus 0.1%. Okay, so yeah, it's pretty well, ticking up month over month, but year over year, as you can see, is declining. And then inflation rate year over year was 2.9%. Okay, it came in lower than expected at 3%. So that is trending in the right direction. So I'll show you on a graph from the start of the year. You'd see 3.1, you'd see 3.2 in February, 3.5 in March. So it did go up. And then April, we did see a decline. We did see a decline, so 0.1 in May. We saw a big drop off in June to 3.3 to 3, and now at 2.9%. So it's trending in the right direction and heading towards the target of 2%. So basically 2% over time for the Federal Reserve before they are confident. But they're not going to wait for 2%. They're going to wait when the time the economic data comes in weak. Okay, so the jobs market is the one that you really look out for. The inflation is going in the right direction, so the Fed's thinking, great, that is what we want to see. But we also want to see weak numbers in the job market. So they want to see that so they can bring it back into balance when they cut rates. So those are the numbers there. And I'll just go back. And we do have retail sales coming out month over month for July. And we have consensus of 0.3, and previously was 0, so no growth. And yeah, we'll see. No changes. So we'll have to wait for that data to come out, which is very crucial to see how the consumer's holding up, as well as, inflation is going, it's still rising, it's still going up. People still feel the inflation. It's still price of goods, their rents, everything is gone up, but just the rate of the inflation is coming down. That's what's going to note there. It's not the actual, it's overall it's going down. It's not true. It's just the rate of the increasing inflation. So it's very complicated to sort of explain, but you get the idea. The Fed are seeing the data come in what they want to see, and they're looking at rate cuts pretty soon, I think. To see some weak jobs numbers to come in to confirm that. So it works hand on hand. They have a dual mandate, okay, jobs and stable prices, okay, so it's inflation and employment. Anyway, so we have Subway next for the stock market news. We have Subway calls for emergency meeting with franchises to address plummeting sales. So New York Post and the CEO there, and it's not looking good for Subway. And a good reason why is someone commented, nailed it right in the head. It happens when you sell garbage sandwiches for $14 plus tips, which is true. It's ridiculous what the prices are for these items and food. People aren't spending it. They aren't going out and getting as much takeaway as they used to. They did cooking more, trying to save costs. And Subway's not a cheap food chain. And McDonald's is, probably comes a little bit cheaper. But at the end of the day, their prices have gone up dramatically. And KFC and all the rest of them, but they're struggling as well. Okay, they're not seeing good sales ahead. They're seeing a weakening consumer, and Subway's having an emergency meeting to address that, to see what they have to do, whether they have to lay off workers or close down stores. It'll be very interesting to see what happens there. So that is Subway. They look very bad. We have George Soros exits Nvidia position, 220,000 shares. So the guy himself, one of the greatest traders and big short sellers, he's made a big bet in the early 1990s. And this guy, he says it perfectly. Wow, this is crazy. He's one of the greatest traders ever, in my opinion. He's traded 992 against the pound, is probably the greatest short trade of all time. So he bet against the central banks in the early 90s and won billions. So he did very well on that trade. And you can see he's exited out the video. So you see his AI boom pretty much well over for now. And he's out. So good on him. He's made his money and he's cashing in on his profits. So I don't blame him for that. Warren Buffett's Berkshire Hathaway now owns more treasury bills than the Federal Reserve. So good old Jerome Powell has been outbid and out-owned by Warren Buffett and his Berkshire Hathaway company. And they own approximately $234 billion versus the Fed's $195 billion. So by a slight margin, he owns more treasury bills than the Federal Reserve, which is quite staggering and it's interesting. He sold a lot of Apple shares to make up for that. 50% of his Apple holdings were sold this year, which is quite staggering because Apple is his largest holding and he's gotten rid of some of it. So quite a bit of it actually, and it's going to treasury bills. So yeah, very, very big play there to earn yield, as he doesn't see a lot of bargains out there in the marketplace. As things are overvalued in his opinion. He did mention this at the Berkshire Hathaway meeting in May. And yeah, he is waiting for bargains to surface. And he's not seeing it, so he's putting his money into treasury bills and doing short-term trades here and there, just to make a bit of cash. But his long-term investing is not. There's opportunities for him to see just yet. Okay, and we'll see that once more reports come out of him buying again, but he's not doing it. Okay, not buying in big portions. As he sees when he sees bargains, he goes hard. He has not. He's going hard into treasury bills. Okay, he's supporting the government there, so it's very, very interesting. We have Home Depot. They reported earnings yesterday session, and they're up 1.6%. Okay, and the earnings call here, we got revenues of 1.1% beat, and EPS bet by 2.7%. I don't know if they revised the numbers lower. Potentially they could have, and that's why they're beating it. But nevertheless, it did beat. But what's interesting to see, it's month over month pretty much. But, you see that, right? And when you see these numbers beat, okay, from that recent earnings, call that just happened, and actually it's every quarter, I should say. It's not monthly, it's quarterly. That's quarterly earnings, quarterly financials, as you can see there. And, you see that and you go, okay, it did beat, right? But, year over year, it's not looking quite good for Home Depot, okay? So year over year numbers, down 2% revenue, okay? Net income, down 7%. Diluted EPS, so earnings per share, is down 5%. Net profit margins are down 5%. Okay, so they're really not seeing the growth that you'd see, in general from a company like Home Depot, which is a staple company, big retail giant that it really services people who do home improvements. And yeah, year over year, it looks pretty bad for that company. And you got Walmart reporting earnings this tonight's session. See what they can talk about in their earnings. We see if they can hype up investors or show a bit more concerning signs which I do believe that's going to happen. See, there's more concerning earnings ahead, and not going to look quite pretty for shareholders, but they have to tell them the truth. And as the economy really is on, really, it's not running on eight cylinders. It's running on 6 out of 8 or whatever. It's not running on all. It's not running perfectly. It's running rough, and it's about to explode. I think it's about to collapse. The recession coming in, but how bad it gets, we don't know. But companies aren't doing so well. The big retail giants, like McDonald's and Subway, as I mentioned, and Target's another one. They're really not seeing great growth, great expectations. As the consumers are cutting back because they're really tightened up with their debt, high rates now. The Federal Reserve have to cut imminently, very soon, to eventually start to impact the consumer again and see things more positively. But at the moment, it's not happening, okay? So that's that. So we'll just go over the stock market now and the S&P. So the daily, and we had a bit of a pump there. It wasn't much. It was 0.4% after CPI came out, and 0.1% basically for the NASDAQ. So not very nice day. It's a very flat day. I do have 2 levels here drawn out for the S&P, and where I see them getting hit. Okay, so I'll show an automatic chart. And if you bring a fib up from the top to the bottom, this correction here, or you can just tag the 0.618 level, which is a very common level of retracement for any sort of price action. And you can see it's come up to it. See like a support level here, and we tagged it again. And I do see if you do break this, 0.786 is the level. Right, watch out for, which is coincides with the upwards, this upwards wedge that's been formed from the 2023 end of the year to July, and then going on to now. Okay, so I do see it getting tagged, or this could be it, one or the other. And this is a big sell-off here happened. So sellers really stepped in here. All right, so this could be a really strong level for the sellers to get back in and sell again before seeing lower prices, okay? So these are some of the predictions I've laid out. So 4,600 and 4,100 for the worst case scenario for this recession. And I don't really have a time frame. I did say in the previous video, I did make a video about NASDAQ, free drive MACD divergence pattern, and talk about the stock market, so the S&P and NASDAQ. And I did say that by the end of the year that we'll get to 4,600 for the S&P, but it's really pushing it probably into Q2 next year or Q1 by the earliest. Okay, I see this coming down, which is from the top of this chart to the bottom. All right, to where I had the 4,600 is a 90% drop, and if you see a bigger correction is 28%. Okay, I do see this being the worst of the recession. It could get a lot worse depending on how bad really companies start to suffer with earnings and laying off workers and the unemployment rate skyrocketing. That really happens, and it gets to a certain degree of panic, and we see deflation. Okay, that's another thing. So that's another concern. We can see deflation. Like we had deflationary crashes in the past. So that can really happen, and it can get even lower prices. Okay, we can go even lower down here, 3,500. But at the moment, being conservative and a 28% correction for the worst recession is what I'm seeing. Okay, so that's that one there. NASDAQ. Okay, we haven't even below this 618 and 786. I'll show you on this retracement tool. Okay, as you can see, so we're at the 0.5 at the moment. We're at this trend line, as you can see. So tagged it here, and we're coming up to it. But we haven't got 6.8 yet, which is this breakdown period we saw here. And I probably do see this being pretty much it for the NASDAQ, in my opinion. The last bit of hope, and maybe a fake out above it, and then that's it, See you later. But I don't see it going up any higher. This sell-off was pretty significant. Okay, and it lines up with the S&P. Go at the S&P chart. See, it's a similar sort of sell-off big sell-off candle there before it broke this trend line. Okay, go back to NASDAQ. It's very similar. Okay, it's before it broke the trend line, it sold off and it broke the trend line. So I'm seeing a similar thing play out. 6.8 is going to get tagged. It does get a bit more bullish. I do see this peak here and this touch, the 6786 level at 20,000 getting tagged. But we're close, all right? We're close to the end of the rally and the end of the hype before we go lower. And I do see us going down to 15.9, right? Base case for this recession. And I'll just bring up top, which is 23% base case. And if it goes lower, I do see a 32% correction. Pretty much a crash by that stage, but if it goes below 20%, I believe that's when the bear market begins. And a 32% correction for the NASDAQ, it seems reasonable. Comparing to the S&P, so you look at this and this, very similar, okay? And that is the bottom of this correction of 2023 we had, which is 27%. And the NASDAQ is at, 32%. So that is predictions for the stock market going in the end of the year. So I hope you enjoyed this video, just going over the CPI numbers, discussing what's happening there. The trend is heading the right direction for the Fed to really feel confident. Rate cuts are coming soon, but that's not a positive thing, okay? Because with consumer, if you really see the reality out there, the reality is inflation is still high and things are still expensive in supermarkets. People's debts are really high because the rates are so high at the moment. And yeah, just certain items are so expensive now, but the rate of inflation is coming down. That's what the Fed look at, is just the rate of the increase of inflation, so disinflation, and it is trending down towards 2% over time, which is what the Fed want to see. So that's good for them. We also had Subway looking good for their sales, and CEO calling a meeting, emergency meeting for the employees, and I suppose franchisees, I should say, not employees, but franchisees, to address what's going to go ahead for this company. Also looked at George Soros selling his Nvidia shares, 220,000 of them. So he's got out of it and he's done really well. So good on him. So he's out. So he's seeing much more upside, and the AI boom has pretty much come to an end, in his opinion, I believe. And I do see that too, because it's just it's overhyped. It's going to cost too much to implement. You need more energy to create the AI, and it's going to, it's just going to drive costs through the roof in companies, and they're not prepared for it. It's just too new, and it's too, it's too wishy-washy, flashy, and I think it's too optimistic now, and it's getting priced in, and that's it. There's not much more room to move. As a handful of companies are really implementing AI, not a lot of them are, so it's not something to really be. It's bullish for the long term, okay, but not for the short term. Price will really lead the narrative, and I do see it coming down. Recession will hit as the more important job numbers will increase, inflation will come down, and Fed will have to cut rates. Okay, when they cut rates, it's because of pain, not because of good times. It's because of pain. They don't see good data. Okay, and we also saw Warren Buffett is piling up into treasuries as he sees no bargains out there in the market. He mentioned this in his Berkshire Hathaway meeting in May this year, and he's just piling up his cash at record levels, and he's buying T-bills, and he's stacked up more than the Federal Reserve itself. So quite interesting. I can't believe Buffett. He's just an absolute genius. You can't bet against the guy. He's the best it ever has been. Had the longest track record of investing and the highest returns, I believe, in that period. So he's done the best of anyone. So the guy knows his stuff, and he doesn't see bargains, and he mentioned that in the meeting, and he's waiting for more prices in the stock market to come down, which is what I'm seeing too. So I did feel him, and he's going against the herd, essentially. He always goes against the grain. He's a contrarian, and he does well out of it. So good on him. And also looked at Home Depot, its earnings. Okay, did beat, but year over year, not looking good. And Walmart is predicting their earnings this session coming out tonight. And we also looked at the stock market, the S&P and the NASDAQ predictions for the recession, and where we see price coming in the short term before the correction happens, okay? And that is the video. So if you enjoyed this one, please smash the like, comment your thoughts below, subscribe to stay updated. Be sure to check out my links below also, and I'll catch you next one. Cheers.